morning, everybody. I hope you are having a lovely, lovely day from wherever you're choosing to join us. Welcome to the Fundraising Techniques and Strategies for Hubs. My name is Brenda. I'm Head of Programs at ASEC. Thank you for taking the time to be part of this conversation today. It's 10:03. We're just giving a few more people to join in, and we should be able to start at around 10:05, 10:06. Yeah, so just look at our membership benefits and familiarize yourself a little bit about who ASEC is. And then at 10:06, we will have Basil Malaki. He is our board secretary at ASEC, who will officially open and invite and basically officially launch this webinar and this training. So just give us 2 more minutes and we'll be able to start. Thank you for being part of this great conversation and taking time to involve share your morning with us. And yeah, so we will start at 10:06. Invite your friends if you haven't already. It's going to be a very, very interesting conversation. Great. It is now 10:07. We have 17 attendees on this call. I think that's a good number to start us off. I'll just stop sharing my screen and invite Basil to start us off.
Thank you, Brenda, and good morning, everyone. Once again, thanks for joining the call. I'm Basil Malaki, Secretary on the ASEC board. My day job, of course, is at TechBridge Invest in Mombasa. I'm incubation manager there. We pretty much do upskilling of tech entrepreneurs, provide venture building services, and invest in high growth startups with potential to realize return and social return on investment. So for those who are joining us for the first time, I'd like to let you know about ASEC, which in our definition is the Association of Startup and SME Enablers of Kenya. The purpose of the association is to bring together and represent interests of organizations supporting development and growth of startups and SMEs for maximum impact. Of course, our 5 objectives are capacity building, collaboration, empowerment, policy, and internationalization. Just to bring you up to speed with some of our numbers, currently we have about 323 community members within our network, and out of which we have 41 paid members, part of the association. This marks our 8th webinar since the start of COVID-19. We've been a bit busy trying to piece together the ecosystem. This can only mean more member engagement activities that help create value to the members and the innovation and entrepreneurship ecosystem at large. Currently, we've just finalized and launched our new website. Those who haven't been there recently, you can check out www.asec.ke. We have a new team, the secretariat team of 3 right now. Brenda being our head of programs at the secretariat. We have Michelle Njeri, who is a communications person on the team. We also have Rachel. Rachel is heading the accounts department. So currently ASEC is run by a secretariat team of 3 powerful ladies. We just concluded our audit process for the financial year 2019-2020, and think that is already being circulated among our partners and eventually should be with the members as well. Of course, that means we're building more confidence in our partners and members, of course. Currently, we are funded by GIZ and ICT Norway. We're currently, vetting, but we've already vetted and communicated to the election subcommittee. As you are aware, we are supposed to be holding now our delayed annual gathering meeting, which was delayed due to COVID-19, and also holding our elections. Part of the board right now is supposed to be overhauled, half of the board actually, And so that process is already underway, and you'll get more communication on that from the Secretariat team in the coming days and weeks. Should be very soon that we hold the elections. Now, bringing you back to where we're here today, we are going to be having a 2-day event on fundraising techniques and strategies for hubs, of course, by the lovely Diana Gichaga from PES. The day one of this session will focus on internal preparations before fundraising. I think this touches on most of us running edible activities within our hubs. Us at TechBridge particularly, we are touched by this since we're already trying to raise to cope with the COVID-19 challenges, but also to just keep our activities afloat. Day two of the session will focus on actual fundraising processes, the do's and don'ts. I think this is where most of us, are from time to time when we do fundraising, and then I will just highlight some of the do's and don'ts to help us be better fundraisers. That's pretty much it from my end. So follow our next webinar, which will also be on 11th and 13th of August, primarily looking at the foundation of product management and how hubs can support innovators to innovate futuristic solutions. This and more information, of course, will be shared via our social channels, our website, Twitter, and LinkedIn. I know the Secretariat team will keep you posted. Thank you very much, and over to you, Brenda.
Thank you, Basil, for the overview of who ASIC is. It's a really good community, and if you are on this call and you're not a member, you can reach out and we can go through the benefits in more details, and also look at how other ways we can engage and contribute to impact the ecosystem. From my end, I will now stop talking and welcome Diana to officially start this very needed and very interesting conversation. We hope to make it as interactive as possible. Feel free to contribute. I'll be in the background. If you have a question, you can put it on the chat, or you can raise your hand and I will direct your questions to Diana. But thank you, Diana, over to you.
Thank you very much, Brenda, and a good morning to everybody. Thank you for making time to join us through ASIC for this very short but hopefully interactive session that will be taking place over the next 2 days. As Brenda said, I'm Diana from Private Equity Support, and what I hope to do today is hopefully be able to communicate fundraising techniques and what you need to look out for. And as I said, we would like this to be as interactive as possible. So if you have any questions, just put them on the chat and then Brenda will let us know. So very quickly, just to go over a flow of what day one is going to be about. The first thing that we want to understand is what are your expectations for the session? So if you could quickly just start chatting on the chat, let us know what your expectations are for both the day one and day two session. Then it'll be easier for us to make sure that at points we stop and pause and see whether or not we are on theme or whether we are just talking about our own things. The second thing is I want to give you an overview of the sessions in terms of what we will be doing between today and tomorrow. I know on the ASEC chat group and the community at ASEC group, there were many questions. Is it the same thing over 2 days? Oh, I wish, but no, it is one presentation, but divided into two so that we'll be able to cover it at least slightly more in depth and allow for more interaction. Then we're going to go through the fundraising process and then fund alignment. So for today, the key things that we're going to cover is the fundraising process and the funding alignment. It's always good to start by introducing yourself. So who is Private Equity Support, or PES, as people like to refer to it? We are an enterprise support organization, and we've been around for about 4 years now. This is our 4th year. And essentially what we do is we work with small and medium enterprises to get them investor ready. So this investor readiness is either raising capital or just repositioning for growth. As you can see on the slide there, we've had a couple of good milestones. We've managed to work with entrepreneurs from around 11 countries. We've worked with about 67 SMEs over the last 3 years, and now this is our 4th year. We've had the opportunity to work with institutions such as the African Development Bank, and we are also members of ASEC, and I'll encourage you to join because not because I'm presenting, but mainly because I see what it is that they're doing for the ecosystem. And I think it's timely, and the programs and trainings that they have are actually quite useful. I've attended quite a number of them, and not to mention the advocacy beat. So what is our goal as PES? Essentially what we want to do is generate an investor-ready pipeline in the early stage financing. So when we talk about investor-ready pipeline, it talks about all the aspects that we help SMEs with, which is pre-investment support, capital raising, and post-investment. So the reason we are having this process or this talk today is because if you look at the screen, I think you'll agree with me that this is the basic process that people understand fundraising is about. So we normally start with, oh, we need to raise funding for program X or for the incubator or the hub. And you normally will start there, maybe shortlist your target investors, engage with them, do the negotiations, draw down funding, and be doing your reporting on a monthly or quarterly basis. We all know that this is what the expectation is. We all know that this is the process that everyone seems to sort of wish to follow, but it does not necessarily go as perfectly or as smoothly as this. And the reason we are going to be focusing on this today is because from our point of view, fundraising has 2 aspects, and that's why we have the yin and yang on the screen, as you will see. So the yin part is the internal part of fundraising preparation. So fundraising is not just about going out and starting to engage. There's a lot of work that's done internally to ensure that you're successful or increase your chances of being successful at fundraising, and that's what we're going to be looking at today. And then the yang here is what we will be focusing on day 2, which is the external facing part. And I think that's a part that most people are familiar with and have experience in. So we are hoping that over the course of today and tomorrow, we should be in a position to take you through the internal facing part and take you through the external facing part so that you're better prepared to undertake your fundraising and also increase your chances of success. So people will ask, okay, so why you? I wanted to put a very interesting slide, but I decided to simplify it here. I titled this slide, The War Stories. And why did I title it The War Stories? I think sometimes what people see is success in fundraising. Not many people talk about the number of times they've tried to raise funds, either for projects, either for companies that didn't work, or the things that went absolutely and horribly wrong. We tend to sort of focus only on the success stories. So we create this illusion that there's some people who have just mastered fundraising, and once the minute they get up from a chair and say, I need money, literally money is thrown at them. So I'm here to burst that bubble and say fundraising is a lot of work. For every success story, that success story has a myriad of examples of where they were not able to successfully raise funding. But one of the key lessons I've learned through these war stories is, and if you look at the first box, when I was working for the private equity fund we were raising funding, or we're raising a fund for small and medium enterprise investment in East Africa. We raised $40 million. And what I realized was that was on the basis of social capital. The principal who we were raising funds with had worked with a number of entrepreneurs in his days as a private equity principal. Those networks that he formed helped them believe the investment theory or thesis that he presented when he said, you know what, I can do SME investing in Africa, specifically East Africa. Are you willing to fund me? And between 4 key people who had never stepped on this continent before, they actually gave the fund or committed to the fund $40 million. So that just displayed to me the power of social capital. So 3 people were able to raise $40 million, but on the basis of the fact that this principal had taken time to develop those relationships. And when we came on board, what we were doing was reinforcing that. So look at your social capital. Who within your network knows you, not you know them, who knows you and who has the power to either open doors for you or is in a position of managing capital and you can actually engage with, so that you're able to see if you can position either your hub, your accelerator, or your projects for this funding. So do not ever underestimate the power of social capital. For people who've never come to a continent, decide to fund, to put money in a fund to invest in that continent, that's a power of social capital. Then the other box here is a brand that you're all familiar with, Britam. Now, within 1 year, and the reason I raised this is we started, it was actually a period of, 1 year. We started a new product and were able to raise $16 million. How? The power of the brand and the power of networks. So we created this product that was dedicated to diaspora, high net worth investors. And what we said was, through log on through the website, we had a special website, pay money into an account, we'll convert it for you, if it's in dollars or any other hard currency, and then we will put it to this particular product. Many of these people had actually never interacted with the individuals who were working in this organization before, but because of the power of the brand and how the process was structured, and we showed them that there was the right processes and there was the right framework to protect their investments, they were able to commit. And then why am I saying networks? The system was, we had what we call financial advisors, people who would go out and actually speak to these people. But because we were targeting people who are in the diaspora, some of these relationships were not really face-to-face. It was someone who would call and be connected with a financial advisor, and they speak, they get confident, and then because of the power of the brand, they were able to actually invest on some of these products, having never dealt with the company before. So what is the lesson here? The power of your brand is very important. What are you known for as the hub or accelerator? You as the individual members and as a team members within these hubs and accelerators, what is your brand out there? Is it that when you're in a program or you're in a certain initiative, people are like, so-and-so is in this thing is definitely going to work. And who are the networks that you actually have? So it's different from social capital. Networks is what allows you to be able to tap into various buckets and pools of different types of capital providers. So power of brand and power of networks. And then the last one is us. And what we're showing here is we started 3 years ago, and this is actually our 4th year. And we've been able to raise funding of about 5 million for some of the SMEs that we've been working with. Okay, slightly more, but we've not yet reached the other million. And over the last 2 years or 3 years, people keep asking us, how did you manage to do this? It's a power of track record. And why do I say track record? It is about the team and the team that has been in that particular initiative. I've been at the capital markets, I've been in the private equity industry, I've been in asset management, and now in advisory. So what is a track record? It's a track record of knowing different types of funders in different buckets. Let me repeat that. Knowing different types of funders in different buckets. If I think about the capital markets, spent a couple of years at the NSE, both, and was involved in the East Africa Stock Exchanges Association initiatives. So networks and track record within the capital markets. If I think about private equity, when we were going investing, we never used to invest alone. We would meet with other funders and private equity firms. So networks within private equity. When I talk about asset management, when we're talking about high net worth investors, pension groups, we are talking about local capital. So all this adds up. So what is the lesson here? The lesson here is your track records. whatever you've done is very important. It need not necessarily look like someone else's track record. What you've managed to do can actually help you either get the right people for your hub or your accelerator, get connections to the proper type of capital built on your track record. So if you have a track record of, say, being very good at identifying the people who have innovation in certain sectors, or you're very well known for being able to help enterprises structure their businesses and these have gone on to be successful businesses, or if you even have just the track record of being able to identify what we call winners, and not necessarily the people who do the hockey stick growth, but also those who are able to grow gradually over a period of time, that is a powerful track record. And that can actually help you raise capital. So the key things to take away from this slide are the power of your social capital. Who knows you, not whom you know. The power of your brand. What is it known for? What are you individually known for? And the power of your track record. What are you known to do successfully? What is your hub known to do successfully, or your accelerator known how to do successfully? So I think I'll stop here and I'll request Brenda to do our first poll. And Brenda, over to you.
Thank you, Diana. I'm just launching the poll in a minute.
So maybe as Brenda starts to launch the poll, with this in mind and the introduction that we have, the poll is going to seek to understand, in your personal view, so in your experience, what is the most important role of a hub or an accelerator? So that's what we're trying to establish. So is it to assist businesses set up the right structures? Is it to facilitate innovation through being able to search for those or originate those unique opportunities that are there? Or is it for you to actually access funding? So all these are actions that hubs and accelerators do, but what is the most important role in your view of hubs and accelerators? Brenda, are we okay? Or can I try it from my end? There we go.
Great.
Excellent. So let's see, please give us your feedback. Let us know what your thoughts are. This will be a very interesting exercise. Ooh. First person has voted. Come on, guys, let's do this. All right, all right. Okay, 10 people have voted. Come on, we're 33 on the call. It's like a concert. You pay for the tickets to hear the singer sing, but we are here telling you to put your hands up and many other things. Audience participation, yes. Okay, come on, guys. Let's at least get in 25 people to vote. Interesting feedback here. All right. Just a few more seconds and then we'll end the poll. Some people are changing their minds. Interesting. Okay, I think we have a clear winner. So 10 more seconds. If you haven't voted, let us know. Okay. All right. So are we okay, guys? 10 more seconds. The last 10. Okay. All right. There we go. So let me share the results. So as you can see, 58% of you believe that the most important role of hubs is to assist businesses develop their business models, products, services, and basic structures. 35% of you believe that it's to facilitate innovation through sourcing for unique opportunities. And then 8% of you believe that it's about ensuring that people are able to access funding for the startups. Okay, thank you very much. So let's just keep that in mind as we continue. So back to the presentation. Let me just put this back on the screen. Right. So this is where we are. And we already know that based on your feedback, a majority of you believe that your role is to assist businesses develop the business models, their products, services, basic structure, and processes. Okay, so when we talk about fundraising, as mentioned before, we had this particular overview of what the fundraising process is. It would be interesting to know, for those of you who have undertaken fundraising for your programs or for your hubs and accelerators as organizations, how long an average fundraising process takes you. So what we're going to do today is we're going to break down what the internal processes are when you're coming to actually undertake fundraising. So we'll be focusing on this particular box, establishing the need for funding. And you might be asking, why is this really necessary? How is this adding value to our discussions at the end of the day? And what I'll ask is for you to just have a look at that screen and see some of the challenges that the funders are or have given feedback on in terms of some of the challenges they see that affects hubs and accelerators when it comes to fundraising. The first thing is, and we're not saying that this is factual, we're just saying it is feedback, so you can agree or disagree with it. But the first thing that they say is, it's not very clear how your value is being done. So just based on what we were saying before, that hubs and accelerators' main role are to help businesses put in to put in structures to help them think about their services and products. So when a funder says that they're not clear what the value add you're bringing, what does that exactly mean? Some of the inputs that we've had to this has been the story of sometimes when you look at who the hub and accelerator participants are, there's such a disconnect, either in terms of the size of the businesses, either in terms of the programs that some of these businesses are doing. So it segues right into the next challenge that the funders are talking about, which is a strategic mismatch. You're doing too many things that don't seem to align. We are trying to be everything to all men, and usually when you try and do that, you end up either not performing as well as you can on some things particular, or you're not really well known for a particular niche. There's no one size fits all approach. And this segues us into the aspects of differentiation. Everyone seems to be trying to do the same thing with the same people. So how are we then differentiating ourselves? People can say, oh, we are differentiated because we are at the coast, we are at the Rift Valley, or we are at the Lake region. Diversity and differentiation is not about location. It's also about probably the sectors that some of you are involved in. Some of you have done this well, but some of you have not really managed to identify your customer segments well. And I'll throw in an example. Someone once said they had an experience of where two participants who were working in the same program with the hub were both being given the same program, so sort of being taken through the same process, but one participant was starting and another one had millions of shillings in turnover. And they wondered really what was the impact in terms of the efficacy of that program. So it's like trying to develop one thing and then trying to stretch it to fit everybody. And from an internal perspective, we understand that developing programs is a lot of work. So sometimes when you have that program, what you try and do is maximize, because you've put a lot of resources behind it, a lot of research, And there's also the cost element. So one of the things that we unfortunately try to do is try and stretch that. But funders are pushing back and saying, really, if you try and approach the same people with the same thing, can you really be said to be doing some value add? Or are you simply trying to churn people through your hub or your accelerator? Another thing that they said was they have a challenge sometimes with the team. And either this could be the management or the supporting team of the hub and accelerator. So, for example, if you're running a tech hub, no tech hub in mind, this one as example, how many people in your team have ran tech businesses? Or how many people in your team have a tech background that is relevant to what you're trying to do with the tech businesses that you're working in? If you're focusing on agriculture, how many people in your team have worked within the agricultural sector? If you say we are helping businesses to scale, and I think there was research that was done by Endeavor at some point, and they kept saying, how are we teaching people to scale when some of us ourselves have not been entrepreneurs or have not successfully started businesses? And they challenged the whole system by saying, India, as an example, is very successful because they have found a way to embed entrepreneurs with the people who are in their hubs and accelerators, people who have succeeded, and importantly, people who have failed. So where are we in that particular pool or that value chain? Is it just bringing in successful entrepreneurs to come and give talks? It's about hand-holding. It's about opening networks. It's about someone you can shadow. Are we doing that? Or sometimes when it comes to the strategy that the hub or accelerator is pushing, when the funder looks at the capacity of the team currently, they wonder, are you even able to implement the first stage of this strategy? When I look at the team that you currently have, there's a mismatch between what you're saying you can do and the team capacity to be able to deliver. The other thing, and I must confess, many of us have this challenge. You know the Swahili saying, mganga hajigangui. Basically, for those who don't speak Swahili, I'll use doctor because I think it's a respectful term. It's hard for a doctor to treat themselves, and it's true. So we are teaching people how to run businesses. We are teaching people what they need to do, having a business-minded approach. And yet, within our own hubs and accelerators, we've thrown that business book away. We can't quantify what our real costs are. We are not thinking about aspects such as diversifying revenue. We are not thinking about having strategies that are unique, identifying our customer segments well. So funders are asking, how are you teaching what you are unable to do yourself at the basic level? Come on, guys. I know some of you are looking at this feedback and saying, it's actually true. And for those who are not in agreement with it, well, you might be in the minority who are actually successfully able to do that. But running your hub as a business with a business approach is something that they don't see. And on revenue, I need to clarify something. We are not saying that hubs and accelerators need to be self-funded now. All funders are saying is, I cannot be the only person providing you the funding for you to be able to survive. In private equity, we call it single focus risk. Essentially, that particular risk, once it occurs, everything is destroyed. So they are challenging. Are you able to diversify your revenue sources, even if it's to do with grants? You know, can you have grants that address different aspects? And then internally as hubs, are we saying that there is no revenue generating activity that we can actually start? So I don't know what you think, your thoughts are on this. Please feel free to put them on the chat, but it'll be interesting to see if this is what funders are saying we are not doing as hubs and accelerators. What are your thoughts in terms of, I agree with this or I disagree with this, or the reason that you find one or two things are not happening? is because of reason A, reason B, reason C. So the basis of us actually focusing on the internal aspect of preparation is to try and address all these things that the funders are talking about, because it means when we approach them to fund either programs of the organization, they're looking and thinking there's a strategy mismatch. I'm not seeing which team is able to exercise this. I'm not even clear that my money will be well used because there's no clear appreciation of what the real costs are, what the revenues are, and who are we really helping, and what's the value add, what can you point at to say, this is how I define my success. This is how I distinguish myself as an accelerator or incubator. So, very funny picture there. Sometimes when we talk and we present our programs for funding, this is how it looks. We are keeping it simple. But really, when you look at the picture, it doesn't look good. So why is the internal prep important? Clarity of the ask. Some of you always ask, justify why you need X. You need to link it to the strategy. If your strategy does not support the ask, then essentially what the funder hears is, you want my money, but you don't know what you're going to do with it, or you're not clear about how much you need. And if those things are not clear, why would I take the risk of funding your initiative or funding you as an organization? The second thing is it allows better alignment. What are we talking about better alignment? If you know what your program or what your organization is out to achieve, then you will likely target those funders who are able to support that initiative. And allow me to just read something short from here. There was feedback in a World Bank document, and I think I'll share the link with you when I share the presentation. In a World Bank document where they were looking at the hubs and accelerators, and I quote, their feedback was, they focus on appeasing the grant makers rather than operational strategy. So this was their view on hubs and accelerators. You're focused more on appeasing the grant makers rather than what your operational strategy, your value add strategy is. And the impact of this is it diminishes the quality and differentiation of services, right? So this is the reason why internal prep is important. If funders are saying they're not seeing the differentiation in our services, because when you say you want to do something, we are all reaching out to funders who may or may not be able to support that strategy. And then because we know running of hubs, we know running of accelerators is costly, we tend to divert our strategies to suit those requirements of the funder. And then what happens, it comes to bite us back because we are not really executing what we are implementing. When you have an understanding of what it is you want to do, it will allow you to focus on raising the right type of funding. And maybe what we need to discuss later on, and we will, is how we can diversify these sort of pools. The other aspect is it will take you a short time. I know some of you in the fundraising process, you've started, you go, you present your case, you're told, give me this document, you're like, oh, go back, start working on it, present that, then they say, we also need this, you go back. That's a lot of time that you should not be losing because you're still running a business, right? Fundraising is a time-consuming endeavor. If you look at how private equity firms do it, what they do is when they are nearing the fundraising process time, what they do is they designate, they say, as the rest of us continue to work, we will do the internal prep, then there'll be key people who will be just tasked with the fundraising. And the reason for that is it's time consuming. You have to keep engaging with people. You have to ensure that you're always timely submitting whatever information is required. So let us also take that upon ourselves. Prepare so that you don't take too much time to do it. I'll pause there. Is there any burning question or feedback we need to address before we continue into the details?
Yes, there is a question from Jules. She or he, sorry, asks, do you mean that early stage startups cannot raise funds as they don't have track record, not enough large network, and no social capital? Um, so do you mean that early stage startups cannot raise
Mhm.
funds as they don't have a track record and they are not large enough and they don't have social capital?
So thank you for that very good question. The first thing I'll say is everyone has social capital. What is social capital? It's essentially the people who know you and also the people you know. So for example, when you're in campus, all of you are studying different things, you make connections, people go off into different industries. That is your social capital. When you start working within a firm or organization, you get to know people, that is your social capital. Those people move on onto other organizations, that is your social capital. So no, nobody has no social capital. You do know someone, and someone knows you. What you need to do is what we call leverage on that social capital. So for early stage startups, if you don't necessarily know funders, and we will come to that much later, is you do know someone who can make what we call a warm introduction. Warm introduction meaning if I know someone who knows someone and I'm like, can you please introduce me to so and so? It is possible. And if you're not able to find person in common, then that's the reason why we have all these networking engagements, such as the forums, the business conferences. Go out there, get to know people, network, so that they're able to say, okay, I know so and so, or I've had so and so, so you're not meeting for the first time, maybe on a cold call. So the second thing is track record. There's the business track record and there's the individual track record, right? So what is your track record? It is what I have learned, how I have applied it, and what I want to apply it to at the moment. So if someone is in an early stage startup, I'm assuming, say, electric mobility. If you're in a startup that's doing, say, electric vehicles, what is your track record? It will be what you have learned. You've probably done mechanical engineering, electric engineering, or related industries. Secondly, where you learned, maybe you did your internship or you did your immersion program, that forms part of your track record. And by the time you're coming to say, I want to do an electric vehicle, we all know and talk about the minimum viable product. What is your minimum viable product and what stage is it at? There are minimum viable products where it is possible to have a prototype. There are others where you need funding to be able to get that prototype out. And how will that funding come in? Based on your track record of what have you learned, what have you been able to do. And I must say, within areas like the Silicon Valley, you have a lot of startups who are able to get funding pre-revenue, meaning they don't even have, maybe they need money, first of all, to get their minimum viable product out, or they do have a minimum viable product, they've not made a sale. Locally here, we have very few pockets. It's not as much as we should be, but we have very few funders who actually back pre-revenue startups or startups that do not have some sort of minimum viable product or service that is already up and running. Is it a gap in the ecosystem? Definitely. Is it something that people have talked about as a shortcoming of early stage financing within this ecosystem? Yes. So long-winded answer, but I hope I addressed that.
One last question before we go on, Dana. There is a question on what fundraising documents that hubs need to have. They want you to go a bit deeper on this.
Okay, so I'm happy that you've raised that question, and that is what we're going to be answering. So in the next slides and in the beginning of the session tomorrow. So in the next slides, we'll cover what internal documents you need to have, and then tomorrow's session will be discussing what external facing documents we have. But that's a very good question. How are we doing on time? Okay, I need to rush a bit. So The first thing we're going to talk about, and I'll just focus on this, is establishing the need for funding. So I want us to just take a step back and think about what we said the aim of, or the focus of hubs should be, which is to assist businesses develop and be able to put in their structures, put in their product or service structures. When we look at the economy, and this is just the first quarter GDP by sector performance, if you look at this, and then which we look at the sort of businesses that we are onboarding into our product programs, or we are working with on a day-to-day basis. If you look at that and compare to what sectors are driving the economy, do we find that we are representative of the economy, or the drivers of the economy, or the sectors driving the economy, or is there a disconnect? And the reason I say this is there's some feedback that has come that says we seem to be, as hubs and accelerators, disconnected from the sectors that are driving economy. So we seem to be very tech focused, or even when we are tech focused, we have been unable to have those benefits be absorbed into this economy sectors, especially the ones that create jobs, like manufacturing and agriculture and things like that. You may or you may not disagree with it, but the reason I want us to have this picture is for you as a hub and accelerator to see, when I say that I am focusing or developing programs, what sectors of the economy am I targeting? On an overall or a macro picture, what sectors of the economy am I hoping to create or help businesses develop? And how does that move the needle? And remember, you could be in the agricultural sector or focusing on agricultural sector, but there are different pockets and value chains in it. You could be saying it's wholesale, retail, or trade, but there are different pockets and values about within that particular sector. So one of the things that we've been asked, or the feedback is, it is not clear what our value add is to what sector and what we are planning to do, or how we are planning to help those businesses within that sector. So have a look at this, understand exactly what it is or which sectors you're going to be focusing on, and let this feed into your products so that, or your programs, so that there's clarity when you go to the funders, what exactly is driving your strategy, right? So if I said, I am starting a program for those in mining and quarrying, the first thing a funder would say is, what portion of the GDP does mining and quarrying impact? It's 1%. Already there's a limitation in terms of the size of the market that you're able to address. So what are you going to be doing differently as a hub or accelerator that is going to help you have that impact within that particular sector? And then the other thing that we need to do as hubs and accelerators, especially now, is understand how the people who we are helping are going to be impacted by how the economy is performing, right? So we know how the economy was performing last year. We know what we've done in Q1, but people are saying that we're going to have a very challenging time going forward. So what does this mean for your target clients? How are you going to be helping people in that particular subsector if on a macro scale, that particular segment is unlikely to do as well as it would ordinarily have? It's something that you need to think about. So we will quickly move to, and why are we doing this? We are doing this because we are preparing the internal strategic document that we're going to use to engage our investors, right? Or our funders. And this is something that is very familiar to you, because we all know that this is the 7 domains model by John Mullins, right? We use this to help our clients be able to structure their processes, their products, their services, to understand what their market is going to be. But then we don't really use this to define our strategy as hubs and accelerators, right? And why are we saying this? Because the feedback that we're getting, it might not apply to everyone, but the feedback we're getting is there's lack of clarity on strategy. There's lack of clarity in terms of who their customer segment is. And everyone seems to be offering the same thing. So I'm very quickly going to go through this because it's familiar to you, but I'll look at it from the hub and accelerator viewpoint. So we are looking at this not as how we help our clients, because the point of this call today is for us as hubs and accelerators to be able to take a look back and say, how well defined am I according to this? So one of the things that we say is, who are you targeting, you know, and what sectors are there? And we've already looked at, this is how the economy is performing. These are all the sectors where we can possibly or potentially have programs addressing. How are we going to be targeting the people within that segment? There are some of you who focus on youth. There are some of you who focus on women businesses. There are some of you who will focus on people at ideation stage, you know, depending on whether you're an hub or you're an accelerator. There are some of you who will say we're in the mobility sector. So it is important for you to understand what is happening within that sector and how that will impact, or how those trends will impact first my target clientele for my hub and accelerator. Two, ability to show value add within that segment. So for example, if you are a hub or accelerator in the hospitality industry, focusing on hospitality industry rather, if you think about what is happening towards, or what is happening with that economic segment, you'll understand that they're facing very many challenges. Their sector economically did not perform very well as of Q1 of 2020. I think they were at 2% of the GDP, and it's going to contract further because Q1, we only started to feel the effects in March. So if you have a program that is targeting hospitality or related industries, if the program is targeting people who are in a segment that might not do well, then what value add can you possibly add to that target clientele? How can you possibly help that clientele? It's key for you to understand that. The other aspect is the industry has been changing. Whereas before, acceleration, innovation, hubs and accelerators were very few in the beginning. If you think about it at the moment, Brenda, I'm not sure how many hubs and accelerators we currently have.
We can't tell across the country or on this call?
Yeah, just across the country. Because the data I have says about 42 in the market, but that was at 2019.
No, it's a lot more than that. I can't give you the figures, but it's a lot more than that.
Exactly. So the industry is becoming more competitive. People are opening hubs and accelerators across Kenya. You're all going to come and target, probably, or currently, you're all probably targeting similar clientele. So how are you going to be sustainable as a hub or an accelerator when you don't have that differentiation, right? What does it take to start a hub or an accelerator program? You know, there are people who simply go rent out space and say they're an innovation hub. The barriers to entry into the industry are not as high, although it's something that ASEC is trying to regularize. In addition to that, we have business associations such as the Kenya Association of Manufacturers going to start their own innovation hubs. We have corporates like NIC Ventures, and I think ABSA has something also, who are starting their own hubs and accelerators. We have development partners who are starting their own hubs. The government, through the youth fund, is also thinking about starting their own hubs and accelerators. The industry is becoming more crowded, more competitive. So, and it's the people who are coming in are people who probably have access to more funding, more resources. So what is your sustainability strategy? And it comes back to here. What are you able to do based on this that is difficult for people, let's say in business associations, corporates or development partners to do? Lastly, before we jump into the next slide, in terms of your team ability, we understand that there are always limitations on resources. In terms of the programs that you want to do, because remember, there's the hub and accelerator as an organization on its own. And then there are the programs that you're running. You can have several programs addressing several areas. But at the program level, do you have the internal team capacity to be able to execute whatever you're saying is making you competitive? And from an organizational level, as the needs of the hub and accelerator changes, do you have that team capacity to be able to go with the change? So say you want to say we are in a COVID period, and COVID is changing and continues to change how businesses are going to be carrying out their programs. How have you as a hub or accelerator started thinking about how to do your programs, right? Or your outreach initiatives? We are all rushing to do everything online. It was initially free, but it can't be free forever. We're going to have to start charging. How are you going to start charging? How are you going to convince people that you're adding value and you are able to charge for whatever programs that it is that you're going to be doing? Some of you who had space, you would have maximized by saying, if we have 10 or 20 people who are coming on an X number of days, we are able to maybe generate certain grant milestones or hit grant milestones, so we are able to get additional funding. That is changing. So when you look at how the trends are affecting not only the economy, but also the target people you're looking for and how your competitors are changing, you need to come up and say, as a hub or an accelerator, this is my unique strategy. I know I'm able to do this. So when I come to the funder to say, I am starting a program to do this because my team is able to deliver, I have examples, even if it's one or two success stories that I can show in this industry that I've been able to do. And when I look at how COVID impacts us and what trends are there in the industry, I have planned for it. So this is my strategy. And that's the reason why this slide is important. We are used to doing this for our clients, asking them, oh, what is your unique selling point? What's your value proposition? What's your total addressable market? What's the one that you can, what's the serviceable, obtainable market? We need to do this for ourselves because this then feeds into the strategy that will help you justify your funding. Then, once we know where we're going, break it down. Nothing too complicated. We have this with our clients. Why can't we do it as hubs and accelerators? What are my milestones for year 1, year 2, year 3? Remember some of the feedback that we had gotten earlier from funders was, we are trying to do too many things at once. If you've decided what your strategy is, if you've decided what sectors are going to be, remember, there are those you can do immediately because of the constraints that you might have in terms of your funding and team. There are those that you're saying, Mr. Funder or Miss Funder, if you give me this money, in year 2, I'll be able to do this, year 3, year 4, so that your funder can say, if I give you a grant worth, say, $1 million, I know based on your funding requirements, you won't come running back to me in year 2 and say, we ran out of money or something happened, because you have a plan. And not a budget for like a budget for budget's sake. No, you have a plan that says, I understand what my funding requirements are. I have provided for any eventualities or uncertainties that they may be. And if you give me $1 million, I'll be able to maybe do my milestones in year 1, year 2, and maybe year 2.5. So even the funder knows you'll have at least a full 1.5 years of working before you start hitting the road again to look for more funding. Because some of the frustration is we are trying to do so many things, so many programs, and each of them need funding. One has to wonder, who is in the hub and accelerator ensuring that whatever it is that you said you would be doing is being executed? Very simple. And then what it allows you to do is also look back at the funders and say, if a funder is having a 5-year program, I've reached them in year 4, and maybe their program might not be renewed. They will likely only be able to give me 1-year funding. What that allows you to do is plan, because there are some funders who you can say, we've engaged, and you're able to say, based on our strategy, we'll be able to work together for maybe until year 4 or year 3. There are those who will just come and say, I'll only come and fund a milestone. So it's important for you to look at your funding requirements, relate them to the milestones, and also the team. The team needs to be there to help you deliver these milestones, because your funding is not going to, it's not an ending pool, you know. You need to show value, and you need to hit these milestones. And sometimes what happens is we are so busy doing, we forget to think about the milestones. Some of you have stories of success some of us don't know about, or some people in the industry don't know about. These milestones, the reason that if they're not documented, it's very hard for you to come back and say, oh, actually in year 4, or even keeping the data, that's quite important. The other thing is, it also allows you to think about the partners you'll align with. So some of these people here, you could tell them, we know you have a capacity to only do X and Y. Why don't you partner with me? You still do your thing, but I can help you achieve some of the milestones where we align. There's room for collaboration. Right, and then I stop again. I don't know if we have any questions before we launch the second poll.
No questions here, just some really good comments on that. This is very insightful. My key takeout so far is to look inwards, go through the process that the commenter will facilitate others to go through. So this is a really good true reflection moment for a lot of the participants on the call. So please comment as we go ahead, ask questions, and I'll direct them to Diana. But then we can go to the next poll.
Okay, all right. Thank you so much for your feedback. And as I said, it's a 2-part series because we are focusing first on internal alignment. It's about, we always say when we are doing fundraising, everyone should be singing from the same hymn sheet. And I'll give you a very quick anecdote. When we were doing private equity investing, and it was actually early stage investing. I don't know why we call it private equity, because we are focusing on small and medium enterprises. When we would approach a factory, for example, we would go as maybe 4 guys, 14 members. 2 would be seated with management, engaging management in a boardroom, you know, being taken through lovely slides, everything is looking good. And then the rest of us would just walk around the factory floor. I'd go to talk to the production manager and say, oh, what do you think about, say, this product, this service? And the production manager would either say, I think it's good, we just don't have funding, or we need funding. Or maybe the production manager, because people have not internally prepared well, would destroy that strategy by saying, I don't even understand why any business would maybe want to get funding for strategy X. Why? Because production manager did not know who we were, or they'd seen us around and thought we were like people from the banks, so we are not going to come and ask many questions. People did not sing from the same hymn sheet. And the reason you need to go through this process is, as people who have run the hubs and as the team, we are not saying everyone needs to be an expert in every area. We are just saying for the area where they are contributing to the strategy, if a funder comes to visit or to have a meeting, if he goes to the receptionist and asks something about maybe something related to the strategy, in the innocence that the receptionist will have, the way he will answer that question will be in a way that just resonates, right? Singing from the same hymn sheet. Okay, so we can close this poll. The second poll is the sources of revenue. And what we want to know is, what are your current sources of revenue? And the reason we are asking this question is, remember some of the feedback that we got from the funders was they need to diversify revenue, right? So we want to understand, what is your current source of revenue? And then we critically start to look at that. And then I know others was very broad, so please feel free when you select others to just put it in the chat what others is. If you don't want people to know what others are, you can also just send it to the panelists. Brenda will be able to see that. Interesting. Okay, come on, guys. We need to do this. This form 16A needs to be filled. I'm so sorry. I realized I'm doing a lot of Kenyan or Kenya-related examples and inside jokes, as it were. So if we have people from other countries, please make yourself known in the chat, and I shall endeavor to ensure my comments and feedback are suitable for the chat. Yes, thank you. Okay, 10 more seconds. Come on, guys. All right. 10 more seconds, let us know. Income from grants mostly. Lots of you talking about income from rent. Others. Okay, last 5 seconds. The best, it's good if you all reply because it really helps us in terms of our next sessions tomorrow. Come on, come on. All right, 5, 4, 3, 2. And now we end the polling. Right, so let me share the results. So as you can see, majority of us are getting income from grants. The rest of us are also getting some income from rents. Then there's the others. Maybe Brenda, you let me know. Very interesting is there's no income from investment into startups. There is no income so far from investment into startups. I think that's something we really need to probably just have a second look at. Is there any feedback on what the others revenue constitutes?
So on the chart, we have a social enterprise model as others. Anybody else wants to share their others? I think others was 18%. So others,
Yeah.
Others, if you take others, please share with us what the other source of revenue is.
Okay.
Yeah,
So
but
let me continue. So the reason we are asking this, as I mentioned, is because we had received the feedback from the funders that they'd like us to diversify our revenue. And when they're talking about diversifying revenue, they're not necessarily saying that you should be able to survive on completely internally generated revenue, but they'd like to see a diversity in that. One of the things that I found very interesting is that we have so far from this group, no one who's claiming to have had some sort of income from investments in startups. I think this could be twofold, mainly because some of you who offer free services do so in exchange for an equity stake. Maybe the way you structure that equity stake might need to be relooked at, such that it is able to be structured in a way that generates some sort of dividend funding and not just reliant on exit. I'll just repeat that. Structuring the equity stake in some of these companies so that it has some features that allows you to start participating in the revenue so that you do not have to wait for the entity itself to have some sort of further on or follow-on funding for you to be able to get your return from exiting that particular investment. Just very interesting thoughts on that. So when we talk about revenues, we are mostly here, right? We have grants for programs, some grants are given to the organization, some of you are given the money upfront, some of you are milestone based, so you're able to draw down depending on when you reach a particular milestone. However, there's something to be said, depending on the type of clientele, and that's why we said we need to be specific. What sector are we doing? What person or what type of person or client or customer segment are we targeting? There's a lot to be said for prepaid sales, or what we call subscriptions. Remember, sometimes as hubs and accelerators, when we think of revenue, we are looking at the people who we are just targeting, right? If those people that you're targeting are, say, post-revenue, if there's a small subscription fee that they can be paying either on an annual or half-annual basis, then that is still some funding that is coming to you. It comes in maybe at the beginning of the year, or it can come in on a monthly basis. It doesn't have to be a large quantum, but I think as COVID has taught us, every little helps. We are not saying revenue at any cost, but any little helps. One of the things that we don't look at is, as hubs and accelerators, we are in the business of helping people think through things, think through how to structure their businesses. We help them do hands-on support. We also are channels through which we can identify innovation or innovative products and services. Why don't we open up the hubs and accelerators? And I'm talking about, there are people out there who maybe work in corporates where they're not enough, there's not enough exposure, say, to innovation, or they want to come and they're thinking about, I want to be able to start a business 5 years from now, other than maybe your program itself. I don't understand why we cannot have some sort of open membership to other people who are not necessarily the businesses that you're targeting, but say, you can be an ex-member or like a category of membership where, even though you're not fully an entrepreneur, for a year subscription, what we are able to give you is overlay that with your program. Why can't we do that? So when you're working with the entrepreneurs within your program, giving them that hands-on support, if you have a session for all of them, say to discuss how to structure a product or service, the people within your program might have access to 4 or 5 sessions on that. Why not invite external people as part of the benefit of their subscriptions to be coming for one of those sessions? Possible? Could be. The other thing that we say is cash sales. And we're not talking about like the coffee shops or things some of us have within the accelerators or the hubs. Cash sales can be looking at what we have or what is being generated and just selling that. Say the number of webinars people have done over the last 8 months. Put that into videos or links that people can say, if you want to understand, say, how to structure products within the mobility sector, we have this recording that is maybe for free, but if you want to access the recording, a one-off price, a bundle of X, that's a cash sale, right? Or if you want to come in and say, we can provide consultancy. So it's, for example, Kenya Association of Manufacturers did research with KPMG in May, or is it in May? Yes, in May of this year. And they are struggling because they are wondering how they can come up with ideas of effecting social distancing on the factory floor, mass disinfection of people as they come in and come out. Those are innovations that hubs and accelerators can provide consultancy for. And what is the benefit? You make use of the people you have in the hubs and accelerators and say, if you know manufacturing has a problem, come in and say, look, from a tech perspective, because we're a tech-focused accelerator or hub, we know these sectors are having these challenges. Can we co-develop something and then be able to give that solution, generate some income, and then decide how that revenue will be shared? Consulting. Investment income. When you get this grant money or grant funding, other than the fixed deposits that sometimes you will put the money in, is money market funding. Have you tried to think about, like we said, if you're investing, and it's surprising really, if you say you're taking stakes in this some of these enterprises that you are investing in as part of, say, if you're giving free services, you're like, we'll give you the free services in exchange for a stake, or we'll give you subsidized services in exchange for a stake. How are you structuring that to be able to generate revenue? Because it doesn't necessarily have to be one type of investment instrument. There are very many options that can actually help you generate income, especially when that company starts to generate revenue. So what are we saying? Understand how you can use the resources that you have to generate cash or diversify your source of revenue, and understand the conversion cycles. This is immediate upfront cash. It's paid maybe at the beginning of the year. You spread it over for 12 years. This is on an ad hoc basis. It's not easy for you to tell what you're going to come into at what point. This is planned money. You know when it's going to come in, so you can plan for it more effectively. Investment income can either be long-term looking or just something, let's say, like putting your money in a money market fund whose interest is able to potentially generate something that helps the business run. Very simply put. I understand, and I know some people had asked on the chat about how we're going to manage during COVID, and I'll just quickly run through this. It's something we've shared before previously in some of our discussions. It's important for you to understand what your revenue milestones. We've discussed revenues that you can possibly start putting together, and I anticipate some of you might already be doing this or planning to do this, or hopefully have been inspired based on some of the things we've said to start thinking about diversifying your revenues. Think about how you're going to be doing your revenue milestones. Face it out. What do you currently have? How long can it last you? If you don't have anything, what resources do you have internally? You have videos, you have materials, you have presentations, you have programs. How do you monetize that? Think about your revenue milestones, and then think about what the minimum cost to run those to be able to generate that revenue is. And then, because remember, we are going back to our strategy. We've had a deviation because of COVID, but there's a strategy that we are working on because there are things that we are planning to do in particular sectors with a particular customer segment. Think about that and have your funding requirements so that you might not necessarily be able to do the full scale of what you're planning, but there is something that you can do, because what we need is some sort of cash runway. Now, we are coming to the last session. I don't know if there are any other questions, because this was part of the internal prep. I think we only have 5 minutes.
Yes, we have 2 questions regarding the income from startups. Why is it so low or non-existent? And why hasn't it taken off in the ecosystem?
Maybe I can also have the other question.
Yeah, this is from yours. I would like to hear more examples about DRC and Francophone countries that you have worked in. It looks like these countries are less attractive for funders.
Okay. All right. So I think that was, let me show what the results of the, oops, sorry. Just 1 second. My mouse is, where was I? I think it was here. So based on the polls, I think this is what you are referring to. The fact that we don't have income from investment into startups. The first thing I'll do, from thinking about it from an academic point of view, what we have today are 33 participants. So it's a small pool. It's definitely just a representation of the ecosystem. It could be that some of the accelerators or hubs that have made investments into some of the more well-known tech companies or successful non-tech companies might not have representation here. So let us first start from there. The second thing could be, and I mentioned, the state of, or the cap, or let me not use jargon, the type of investments that are being made into startups. People tend to go for equity stakes, and equity stakes are of different types. I think the current equity stake versions we've seen are where you take an equity stake and you hope to get some sort of return when either the company has a first round or second round or subsequent round of funding. So essentially, you're looking at getting the value of your stake. So you're saying, I initially put in, or the value of the services is say $100,000. So in this company, if we are taking a 1% or 2%, because some of you are very prescriptive, you say I'm taking an X% of stake in this company, it will be the equivalent of my maybe not $100,000, say $50,000 or something like that. Then when this company raises money, because when people are raising funding from external funders or say either venture capital, they tend to want to have a very neat, what we call a cap table. So they want to have as fewer investors as possible. What the Hub or Accelerator can do is say, as the entrepreneur is selling his 30% stake in the company or 20%, please add our 2, whatever terms is negotiated, we will get that the same terms for our 2%. What could have happened is, because people tend to underestimate how long it takes for people to be able to get a valuation that is attractive, especially once you've done the first investment cycle, that might be further along. And remember, we seem to have a very focused mindset that everyone is going to get VC money. No, not all businesses are VC businesses. And that's something that we are going to come to when we are thinking about, and I think I'll just touch on it now. If you look at the nature of your businesses and you critically look at where they're likely or how they're likely to do, or sorry, how they're likely to have success, there are companies where they'll be initially as in instinctively attractive to venture capital. Why? Because it is possible for this company to grow on a 20, 30% or 40% year on year, maybe because of the way it is structured. It is something that can be put in Kenya, in other countries, and they can immediately start making traction in terms of revenue, not profit, revenue. There are those companies you work with and you realize the best thing for this company in terms of investment would not be venture capital. It could be a corporate, and that's something I wanted to highlight. Instead of NIC Ventures, maybe starting, or now it would be NCBA Ventures, I guess, starting a ventures hub. If I am a fintech focused hub or accelerator, I'll go look for these financial institutions, either in insurance, in banking, whichever financial institution, and say, I know how expensive it is to do innovation internally. I know you might not necessarily have the people or the processes to be able to do innovation, even though you do have money. Why don't we partner? And then I am like your outsourced innovation hub. What you do is you come and tell me, we need problems, we need solutions for the problems we are having. And then you pay us as the hub, it could be milestone based, to be developing either a one-off solution or many other solutions. So if that's the type of company you have, then you realize that whatever investment you make into it should be something that allows you to have some sort of dividend income. And then you keep your stake because the value of the company will slowly grow, but it will be something tangible when you say 5 years from now when we exit, or maybe we are bought out by NCBA Ventures, we can either sell out the whole stake we have or just a partial, but in the interim, we'll be able to make money from this. So to answer that question in summary, it could be because the way the investment into startups are made, they are made in such a way it's not possible for you to have what we call immediate liquidity from that. Then the other question was with regards to our experience in DRC and Francophone countries. So I'll be very honest and say my experience with Francophone countries has been in 2 ways. One, during my private equity and at my asset management, private equity, and at the stock exchange, I did have the opportunity to do a bit of work in Rwanda, and also there was exposure to some companies that were located in Cote d'Ivoire. So the question was, why aren't we getting investment into places like DRC? Investment is about risk and risk perception. And I'm so happy because that is the last slide we are coming to. Risk and return opportunity. So when someone thinks about investing in DRC, because remember, investors are not investing their own money. They're investing money they've collected from other investors. So they have an obligation to these other investors to make a return. And there are certain requirements within which this investor must invest. So some of the things that they will say is, when you're doing your risk analysis as an investor, where is the highest risk likely to come from? In some countries, it could be the legal framework, meaning, yes, the laws are there, but your ability to enforce is either very difficult or it will take a long time. You might as well just not bother doing that. In terms of also the investment, it's the ability to manage investments. We are lucky within East Africa that a lot of the PE funds or investors tend to have local offices or representatives here. So there's some sort of on-the-ground oversight. In some of these countries where there's been a bit of a history of uncertainty of political upheaval, then what you find is there are less and less people with on-the-ground presence. So it makes oversight of any investments very difficult. And remember, investors don't make money when they put the money in. They make money when the company is able to do what it has said and be able to generate a return. So investors make money on exit. Then depending, because I'm answering this question from a private equity perspective, all investors invest with the exit. If I put money in a company, say in DRC, and I'm not saying anything about the country because I know there are certain initiatives, I think even by the IFC, to focus on such countries, some investors will say, even if I put my money, what is my exit? Who's going to buy me out? You know, who's going to give me that liquidity event? So this could be some of the challenges that some of these countries have. In terms of Francophone countries, I know there are lots. Maybe what we could do is in the next session, probably share some data in terms of the farms who invest in Francophone. And I'm not sure about the grants providers, but I could find out and share the information. But in terms of investors, there are quite a number. We have Investiteur Patinier, and we could give that list. But there are funders who are looking at Francophone speaking countries. And I think there are lots of initiatives for Francophone speaking countries. So in quick summary, what was the point of all these internal discussions that we have? And this is the last slide. It was for you to be able to align your hub and accelerator strategy with the investor focus. Your strategy will be clear about what am I addressing, how my approach is unique, and it will be clear about how you add value. And then it will also be clear about how I'm able to execute this strategy in terms of the funding need I have and the team capacity to be able to deliver this in the immediate term, maybe not in the long term. We will continue adding team members, and it will help justify the ask, the amount, and the milestones that it enables, so that a funder is able to say, if I give you 500,000, I know based on your strategy, given your budgets and everything, it will be able to take you from point A to B. You're unlikely to come back and ask me for additional money because it was not well planned, and it will allow you to agree on your impact metrics and measurement. So from an investor focus, he is now seeing this from this perspective. How sustainable or defensible is this strategy? How many people are doing it? Is it differentiated? Is this the team to back? Because as a hub or accelerator, you can go sell an idea, but you're not able to convince the investor that this is the team to back. So what they do is they're like, oh, I like this idea of yours. I just won't work with you. I'd rather work with someone else in the sector. So it's very important for you to ensure that you have the team to back it. I know a number of you have horror stories where you say you went to sell an idea or a proposition, and then the next thing you saw was someone else, another firm implementing something simple, similar. This is what happens. And then of course the funder wants to understand is the proposed strategy within his target areas. So some people are Kenya focused, others are region focused. Others might be focused to certain sectors like tech, mobility, agriculture, fintech. They'll want to see how that aligns. And then he needs to know how you're going to help him as a funder achieve his KPIs. Because remember, he has KPIs. We all know the most famous one, jobs created. And I know a lot of us are thinking, usually have the pressure of, we need to create 1,000 jobs. Maybe your strategy is not to do 1,000 jobs, it's to do 20 jobs, but those 20 jobs will be long-term very well, and the impact they have on the families, on the community is much larger. And then finally, the risk and return compelling. Whatever you're doing, what is the risk? Not only in the sector, not only in the team, but because of how your processes and structures are as an accelerator. And we're going to talk about due diligence and documentation tomorrow. And then based on that risk perception, because remember there's risk as is, how it's perceived, and the actual risk, am I willing to partner with you? And then finally, please, document the strategy. We're not talking about 300 pages. Simple document. It could even just be that diagram. Keep reviewing it frequently because things keep changing. Update it so that when a funder tells you, give me that document, you're not thinking about, and that's something we're all guilty about, oops, I need to go and update and change. No, and then repeat the process. So I think that is my strategy for today. I mean, that's my session for today. I know we are 7 minutes over time, but what I'd kindly like to ask is if you could kindly just tell us what your takeaway from today is, then maybe tomorrow we can look at the funding solutions. We can have a breakout session on this. But please let us know what your key takeaways are from today as we prepare for tomorrow's, which will be the funding engagement processes, such as the documents, what is required, and practical tips. Thank you, and back to you, Enda.
Thank you, Diana. That was a really, really insightful session. And someone is asking, the question on fundraising documents hasn't been covered. Will we cover that tomorrow, Diana?
Yes, we'll cover it tomorrow.
All right.
That's the external facing, yes.
Yes, we'll cover that tomorrow. A comment is, I suppose you can use the hub strategy to create documents, but we are having a part 2 of the session tomorrow, same time, 10 a.m. to 11:30 a.m. We will update the link and share it with the guys on this panel and those who are not panel, the guys on this, the attendees on this call, and also others who will be joining us. But thank you very much for choosing to spend your morning with us. I think it was a very insightful discussion. There's a lot more depth as we delve deeper into day 2. Be sure to join us tomorrow. But that is everything from us. Thank you, Diana, for the session. It was very, very well thought out and led, and we're looking for, at least I'm looking forward to being part of the discussion tomorrow. Marcy says, my takeaway is that it's not always about making profits, but the impact in the communities we work in. Yes, that's some good takeaway. Then we have George saying, thank you, very insightful. Yeah, so join us tomorrow, same time. I'll update and send you the link. And let's continue fundraising, creating impact, and building the ecosystem. It's over and out for ASEC. Join us. Get in touch if you have any questions in regards to how to become a member, how to contribute, how to join the community and the ecosystem. And yeah, over and out. Have a lovely rest of your day, everybody.
Thank you, everyone. See you tomorrow.
Thank you, Diana.
Thank you, Brenda.